Okay, recording this video before the open, Monday the 11th of July 2011. Got a question from Brian, and I've paraphrased the question a little bit, but broadly speaking goes like this. I use volume charts. Is it logical that cycles and beta sine wave would provide value if every bar is the same amount of volume? It's interesting, over the last 6 or 9 months, got quite a lot of questions about volume charts, range bars, momentum bars, and so on. And I think these kind of alternate types of charts are becoming quite popular. Broadly speaking, they determine the start and close of a bar by the amount of activity that happens during the bar, not the amount of time that elapses. And I'm a big fan of kind of using activity as a measure of when to start and stop the plotting of a new bar, rather than just time. And I'll try and illustrate that on some of these charts. But the short answer is yes, absolutely. Cycles work, and I think actually particularly well on these alternate types of charts. And I'll try and illustrate that. First of all, just brought up here a tick-based chart. So this is one of my kind of standard intraday charts, a 1500 tip bar chart. This is Thursday's overnight activity into Friday's open, and all I plotted here is beta sine wave below the price bars and beta sine wave as the support and resistance lines on the price bars themselves. So beta sine wave here is an alternate version of John Eller's Hilbert sine wave code, a little bit of improved, and it's just showing you the cyclical activity throughout the day. And then beta sine wave support resistance is picking out those support and resistance levels, and when we break into a trend, plotting the pullback and end of trend warning signals on trending activity here. So you can see we had the sell-off pre-open on Friday, finishing with a pullback into an end of trend warning signal here, which kind of marked the low quite nicely. And then we've got all this cyclical activity kind of batting backwards and forwards on Friday's trade. We didn't do too bad a chart, kind of picking out the highs and lows. I think the resistance levels were really nicely kind of plotted. A couple of support levels would have been, there are kind of better plots. Maybe this one here was better printed here. This one here would have been nice to have kind of catch the low down here. But apart from that, it's not done a bad job of kind of pulling out the trending activity and the support and resistance levels here. So that's just a regular 1500 tip bar chart. Now, first of all, let's just compare that with a 3-minute chart here. So exactly the same activity. I've used, I beg your pardon, a 2-minute chart. Should have changed that. This is a 2-minute chart. I've used a 2-minute chart because basically it compresses the activity that we had during the day. This is the open to the close on Friday. Same kind of bar spacing, open to close, and we've got a similar kind of chart on a 2-minute chart here. Now, interestingly, on the 2-minute chart, beta sine wave actually plotted these kind of support and resistance levels really very nicely indeed. Very nicely done doing that on a 2-minute chart, kind of equivalent to a 1500 tip bar chart. The problem I have with using a time-based chart is this. So this is the pre-open activity, and you can see during the pre-open you've just got a massive number of bars kind of being plotted, because all of that activity is being represented with time-based charts, whereas if we were just using a 1500 tip bar chart, this is the activity from the close to the open. It's all compressed because the activity is being compressed into charts based on the activity, not on the time that is elapsed during there. So that's my reasoning for using tick-based charts as opposed to time-based charts. Then there happens to be another advantage, which is Beta Pro-Am is really designed to work on tick-based charts and works kind of perfectly well on that. It works okay on time-based charts, but it really is superior on tick-based charts. But there we go. So that's the default why I use tick-based instead of time-based charts. Now let me show you a volume-based chart. Now this is 1500 tip bar chart versus a 7500 share chart on TradeStation here. So this is each new bar is being drawn when we have 7500 contracts of the E-mini being traded. And again here, roughly kind of lining up the open to the close on Friday's activity, and you can see on the share-based or the volume-based chart here we had the sell-off, and the pullback to end of trend was nicely marked. A little bit better on the tick bar chart, picking out this pullback to end of trend, a little bit late on the pullback here. The volume-based chart actually saw a pullback to an end of trend kind of sequence here with the first kind of half hour of trade here, which is nicely kind of printed. But then these two kind of support levels here were very similar to the tick-based chart, and they could have been improved on, I suppose, but then the rest of the day, not too bad. Was picking out these kind of resistance level here, could have been a little better during this kind of sequence here, which I think was better plotted on the tick-based chart, but you can see you get a similar type of pattern on a volume-based chart. Then showing a range-based chart, so exactly the same 1500 Tickbar chart versus a 1-point chart here with the activity during the day open to close. And again, this chart kind of showed us the sell-off into a pullback to end of trend, and then we got a second cyclical turn here, so it's showing a little bit more kind of cyclical activity at the end of this trending move. And then during the day, it was showing the highs and lows. I think the resistance levels were really nicely plotted. Some of the support levels could have been improved on. That might have been improved on. This one here, maybe this one here, and so on. But broadly speaking, it was picking out that kind of cyclical activity and the highs and lows being plotted there. And then lastly, a momentum chart, exactly the same kind of activity, 1500 Tickbar chart versus the momentum chart, and this is using a 1-point momentum chart. For some reason, TradeStation here has plotted the pullback to end of trend here with the text on that chart here. I think that's a glitch in TradeStation. Might have plotted differently if I was running the chart in real time rather than kind of pulling this up kind of after hours. So that's just a point to kind of note here. And the momentum chart is very similar to the range chart in showing this kind of pullback to end of trend and then the cyclical turns after that. But then during the day, the cyclical activity was really very nicely marked with these kind of highs and lows kind of activity there. So there we go, just a comparison of these kind of activity-based charts with kind of tick, volume, range, momentum charts. Now just a caveat to say, Better Pro-Am does not work on range-based or momentum charts. It's just kind of the internal logic in Better Pro-Am works for tick-based charts and time-based charts, but actually doesn't work for these range momentum charts. So that's just a kind of caveat, and it's the reason why I've stuck with tick-based charts for years and years now. I just think they're far superior. But that's not to denigrate the other types of charts. I think activity-based charts with kind of volume, range, momentum is extremely useful. So there we go.